Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets of the corporate world. And let me tell you, Prudential Financial Inc. Its latest 10K filing is a real page, turner filled with some spicy details about employee misconduct and even some legal battles. Get ready to dive deep into the financials of a global financial services giant with some eyebrow-raising numbers. Before we jump into the juicy bits, if you appreciate getting straight insights from corporate documents like this, make sure you are subscribed. We also have a Discord community linked in the description below where we break down more of these filings. Let's start with the big picture. Prudential Financial Inc., or PFI as they call it, is a huge player in the global financial scene, managing a staggering $1.6 trillion in assets as of the end of 2025. They operate in the US, Asia, Europe, and Latin America, offering everything from life insurance and annuities to retirement solutions and investment management. Now, a critical detail from their past is the demutualization of the Prudential Insurance Company of America, or PICA, back in 2001. This means PICA transformed from a company owned by its policyholders to a stock company owned by shareholders, a move that led to the creation of something called a closed block. This closed block essentially holds specific assets and liabilities related to older participating insurance and annuity products. It is treated as a separate business, kind of like a historical record that is winding down. Their strategy is all about growth by focusing on retirement and asset management worldwide. They've got these fancy business systems that mix protection, retirement, and investment management, aiming to give customers integrated solutions and capitalize on long-term trends. Let's talk about PGIM, their global investment management business, which is a serious powerhouse managing around $1.466 trillion in assets. They're busy centralizing their distribution and offering solutions across public and private markets. This business is all about performance, talent, and client relationships. So, how do they make money? Mostly through asset management fees, calculated as a percentage of assets under management. Sometimes they get performance-based fees if they hit certain targets. They also earn from originating and servicing commercial mortgages. And get this, they even hold seed and co. Investments in some of their own products to show clients they have skin in the game. Their profits are pretty tied to how well the markets are doing, especially interest rates, credit spreads, and stock prices. Now, for their retirement strategies business, which is a pretty big deal, they serve both individuals and institutions, offering things like pension risk transfers and guaranteed investment contracts. For individuals, they have these FlexGuard annuity products, which sound pretty flexible with index based strategies and downside protection. In individual life insurance, they're looking at variable, universal, and term life products aimed at protecting individuals and families and helping with estate planning. They've been adjusting prices and features to keep up with the economic environment. When it comes to international businesses, Japan is a major focus. They offer life insurance, retirement products, and investment products. But sales there have been suspended recently because of an internal investigation into employee misconduct. This is a big deal, and they estimate it could hit their tax-adjusted operating income by $300 to $350 million in 2026. Ouch. This segment is a bit of a catch-all. It includes corporate operations not assigned to business segments, like capital not deployed, employee benefit plans, strategic expenditures, and importantly, divested and run-off businesses. This is where they put the results from businesses that have been or will be sold or exited, like their Assurance IQ operations and a managed futures firm called Prudential of Argentina. Remember that closed block from the demutualization? Well, it is still a thing, accounting for about 16% of their total future policy benefit reserves. It is basically a way to manage the earnings from old participating policies, and any excess earnings go back to the policyholders as dividends. Alright, let's get to the numbers. For 2025, their net income attributable to Prudential Financial Inc. went up by a pretty solid $849 million compared to 2024. This jump was mainly because of higher pre-tax earnings, even though taxes went up significantly. Total revenues took a hit though, dropping by $12.1 billion. A big reason was lower pension risk transfer premiums, meaning fewer of those big deals happened this year. On the bright side, net investment income saw a nice boost of over $1.5 billion thanks to business growth and better reinvestment rates. That is a good sign for their core investment management side. Looking at their various segments, PGIM, their investment arm, had a pretty stable year. Retirement strategies, however, saw a dip partly due to less favorable assumption updates. But even without that, the underlying business showed some solid investment spread results. Group insurance saw an increase mainly from better underwriting. Individual life also improved. Thanks to a reinsurance deal and better mortality experience though, investment spread results were a bit weaker. International businesses also showed growth benefiting from higher investment spreads and underwriting, but currency fluctuations were a bit of a drag. PGIM's total assets under management hit over $1.6 trillion by the end of 2025. The biggest chunk of that, around $900 billion, is in public fixed income. They also managed a substantial $223 billion in public equity. It is clear their investment management arm is massive. In retirement strategies, individual annuity sales, specifically indexed and fixed annuities, are growing, which is good because they're less volatile and more capital efficient than those legacy variable annuities they're winding down. Now, for the risks, like any giant financial company, they're exposed to a ton of risks. Investment risk is a big one, meaning potential losses from defaults or value drops in their portfolios. Things like economic downturns, volatile markets, and changes in interest rates and exchange rates can all hit them hard. They also face insurance risk, the chance that actual claims or policyholder behavior turn out way different than they predicted. Think pandemics or disasters that could lead to massive payouts. Market risk is also a huge factor, with changes in interest rates, stock prices, and currency exchange rates affecting everything from product profitability to investment returns. And then there is liquidity risk, the danger of not having enough cash to meet their obligations. This could happen due to derivative collateral market exposure, asset liability mismatches, or unexpected cash demands from things like severe mortality events or mass policy surrenders. On a more positive note, management reported that their internal controls over financial reporting were effective as of the 31st of December 2025. And thankfully, no material cybersecurity threats were identified that significantly impacted their business during the reported period, although they did have a cybersecurity incident disclosed in February 24. Looking at the balance sheet for 2025, their total investments are a massive $470 billion. Their investments in fixed maturities available for sale alone are over $331 billion. Now, let's talk about how the money flows. Total revenues for 2025 were about $60.8 billion. A big chunk of this, over $30 billion, comes from premiums, but premiums actually dropped significantly compared to 2024, mostly due to fewer pension risk transfer deals. On the flip side, policyholders' benefits also decreased substantially, which makes sense if they're paying out less on those big pension deals. What is really interesting though is that net investment income jumped by $1.5 billion, showing that their investments are performing better and growing. Now, for the shareholders, Prudential Financial's common stock is publicly traded on the New York Stock Exchange under the ticker symbol PRU. As of the 30th of June 2025, the market value of their stock held by non-affiliates was over $37 billion. They've also got a share repurchase program, aiming to buy back up to $1 billion of their stock in both 2025 and 2026. Looks like they believe their stock is undervalued. So what is the verdict on Prudential Financial? They're clearly a massive, diversified financial giant with a strong investment management arm in PGIM and a solid US business. The international businesses are facing some headwinds, especially with that sales suspension in Japan, which is a serious concern for their upcoming earnings. The company is actively managing risks, particularly around investment and market fluctuations. And they've got a complex web of reinsurances and financial derivatives to navigate. Despite some big hits from that Japanese misconduct investigation and some less favorable market experience updates in their retirement strategies, the overall picture shows resilience, especially in their investment income. The share buybacks signal confidence from management. However, the sheer scale of their operations means they're always juggling a multitude of risks, from cyber threats to regulatory changes and economic downturns. Their long-term strategy focuses on retirement security and investment management, hoping to leverage global trends. Personally, I am watching that international business closely, especially after the Japan news and how they manage those complex product guarantees. But for now, Prudential Financial shows the scale and diversification to weather market storms, with PGIM continuing to be a standout performer. Alright, that is our deep dive into Prudential Financial's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.